Bart Chilton. Welcome to all you boom busters. On tap today, in light of a Southwest Airlines engine failure, which took the life of one person, we talk with Gary Leff, the founder of viewfromthewing.com. And some regulators are seeking more clarity regarding cryptocurrency exchanges. Jeffrey Tucker, the editorial director of the American Institute for Economic Research, joins us for a crypto conversation. Plus, as the International Monetary Fund prepares for their meeting here in Washington at the end of the week, they've released a report about future global economic projections. We'll ask the founder of Money Strong, Danielle DiMartino Booth, about that report and about new trade and sanctions news. All of that in our sights, but first let's get right to some headlines. Yesterday, we reminded you that it was tax day, not like you needed a reminder, but today, it's deja vu all over again, as the famous baseball catcher slash philosopher Yogi Berra once said. The Internal Revenue Service has extended the deadline for filing 2017 taxes to midnight tonight, Wednesday, April 18th, after glitches in the online filing system caused the IRS to perform a hard reboot. Doesn't that mean that you unplug the system from the wall and then when you lose all the data from the ongoing documents? Seems really scary, but it's hard to understand what was actually going on. Well, the IRS direct pay and payment plan pages were effective, and the system was not restored until full functionality was regained at 5 p.m. Tuesday evening. IRS Commissioner David Cotter officially apologized in a statement. The glitches reportedly resulted from hardware issues and not hacking. The IRS budget has fallen from $14 billion in 2010 to its current $11.5 billion. That has resulted in a loss of 20,000 IRS employees. President Trump, for his part on the IRS budget, calls for continued cuts to more than 4,000 jobs. Observers say the Trump cuts would only allow the IRS to respond to 40% of all calls to its tax help hotline. And filling out a story we discussed yesterday, bank profits are soaring in the first quarter, pushed up by the recent Trump tax cuts. The Wall Street Journal reports that the profits of Goldman Sachs and the so-called Big Four national banks increased by $2.5 billion in Q1. Bank of America had a $6.92 billion in profits, a 30% increase. B of A says their effective tax rate fell by 9% after the tax cuts. Goldman Sachs profits were up by nearly as much, 26%, to $10 billion. And one interesting footnote in the journal's analysis, without the tax cuts, Wells Fargo would have had a decline in earnings, and year-over-year growth at B of A and Citi would have been essentially flat. In other quarterly profit news, Netflix posted some head-turning numbers for Q1 with $290 million in profits, a 62% increase versus the same period last year. In the health sector, United Health posted an approximately 30% increase with $2.8 billion in profits, and drug and consumer health products, J&J, Johnson & Johnson, declared a $5.64 billion in the black, an increase just short of 12%. And in the tech sector, IBM posted a $1.68 billion in profits, which was actually a 4% decline. And a Southwest Airlines flight that took off from New York blew an engine and shrapnel smashed into a window and damaged the fuselage yesterday, killing one woman, a mother of two, who was partially pulled out of the window due to air pressure as the plane was flying at 33,000 feet. 7 other people were injured. The plane made an emergency landing in Philadelphia. This was Southwest's first fatality in the air in 15 years and the first U.S. air carrier passenger fatality since 2009. The National Transportation Safety Board, NTSB, is investigating the circumstances. Although passengers say the pilot, former naval aviator Tammy Jo Schultz, is a hero and that things could have been much worse. Ms. Schultz was one of the first Navy fighter pilots ever. Southwest CEO Gary Kelly praised all members of the airplane's crew. And here to discuss this and more is Gary Leff, the founder of viewfromthewing.com, who joins us from Austin. Gary, thank you again for being with us. It's absolutely horrible that a life was lost in the circumstances. No question about it. Hard to even talk about it, quite frankly. But it is outward evidence that the pilot there did a superb job, it appears, in avoiding what could have been a much more horrendous situation. Should Southwest travelers or other air travelers be concerned about flying flying in general or flying on these planes? I believe it was a Boeing 737. What do you think, Gary?
We're talking about this now at such big news precisely because it is so rare. Air travel in the United States is safe. 737s are safe. The CFM engines are safe. There has not been a U.S. airline fatality in 9 years. So we're at a place now in the world where air travel is so safe that it's only really outlier incidents that just have not been predicted, where there's a confluence of events that occur. They're investigated and new procedures are developed to make sure that they don't reoccur. But this is a tragedy. It is incredibly rare, and people should understand that travel by air is one of the safest things that they do at all.
Whenever there's I mean, I 100% got you on safe way to travel, and people shouldn't be worried. But whenever there's an accident, whether or not it's air or car or anything, I mean, not just little fender benders, but regulators look at whether or not anything should be changed. I assume that they're inspecting these engines all the time, but that is something that NTSB will be looking at. Do you believe that?
Well, certainly, there have been issues with engines in the past, with even similar engines. And in fact, 22 years ago, there was an incident with a different engine on a different plane with Delta where a piece penetrated the cabin. But they're going to work to understand under what circumstances does metal fatigue, if indeed that turns out to be what this was, occur, and what kinds of inspections might look for or identify potential cracks. The way that they approach these things is to understand the probable cause, and generally speaking, these are things that haven't happened before at this point because the procedures are simply so good to address the things that have come up before, and they will develop new procedures to prevent their reoccurrence.
And you don't think that this will have any sort of detrimental economic impact on Southwest or on other air carrier traffic, do you?
Well, certainly the publicity isn't good, and people are going to pay attention to this. However, we've certainly seen in the past incidents that have occurred that have not done lasting damage to major carriers with good safety records, where they don't have other significant issues at the same time. I think that Southwest will get through this the way that Delta and American Airlines and United have gotten through issues before. This is not the same kind of a situation as a small carrier with other significant financial problems in the past. They have a wonderful reputation over the course of 47 years, and in fact, it's better than you were suggesting at the opening of the segment, because the incidents that they've had in the past were not passengers on board their planes who suffered as a result of mechanical failures. So this really is something unique in the history of the airline.
When we look at ratings for these airlines, whether or not it's safety or comfort, etc., and I know you do a lot of those on viewfromthewing.com. People should go there and check it out. But how do they come up with these sorts of ratings, Gary?
Well, so each of the rating systems is going to be different. If you're looking at the research that comes out of Embry-Riddle in Wichita State, they're looking just at on time and cancellations. If you're looking at, you may be looking at baggage handling. Most of the rating systems don't look at passenger comfort, but roughly speaking, they're all going to be looking at published statistics that are provided by the airlines to the Department of Transportation, and they're looking at different ways of parsing the data, weighting different factors to come up with their results every year.
Gary Leff, we really appreciate you being here. Viewfromthewing.com. Thank you so much for joining us.
Thank you.
Eric Schneiderman, the New York State Attorney General, is seeking more transparency from 13 cryptocurrency trading exchanges, including Coinbase, the popular California-based crypto trading venue. Schneiderman said in a statement that too often consumers don't have the basic facts they need to assess the fairness, integrity, and security of these trading platforms. New York State was an early regulator of cryptocurrencies, one of the first, if not the first. And here to discuss this and other crypto news is Jeffrey Tucker, the editorial director, rather, of the American Institute for Economic Research. Jeffrey, thank you for being here. I almost messed up on your name. I know I did it one time. I'll apologize from months ago. I think I said American Enterprise Institute. Apologize for that. We know who you're with, and thank you for being with us. What do you make of Schneiderman's call for more information from these currency exchanges, Jeffrey?
Well, I think in light of the experience with New York regulations, people should be worried. You know, the last time New York attempted this to regulate crypto with its bit licenses, regulating the exchanges, right. 15 exchanges just immediately left Manhattan, and it killed New York as a crypto center. I mean, that was a disaster. I mean, bit license was interesting because it was supposed to be a model for the world. It still is the leading example of how not to regulate crypto, because all these companies went somewhere else in the world. So I would be concerned about, you know, new regulations on ICOs and tokens and the exchanges and what tokens they're trading and not. You know, as for transparency, I mean, come on. These exchanges are perfectly transparent. Anybody who's involved with them knows the risks. I don't know anybody who's not involved in these markets that doesn't understand you could lose your shirt. I mean, we've just lived through a 70% drop. I mean, you talk about a crypto winter. This was an epic one. It wasn't the largest drop we've had in 9 years, but the stakes are getting higher because every time the price of these things collapses, it then reaches new highs, and the businesses expand, people expand their holdings, and just the stakes keep going up with each of these rounds of these roller coaster pricing manias.
Let me ask you, so the people that are involved in the space that are already investors, I think you're right that you know, they've got sort of a comfort level with where they trade. But if you're a new investor and you look at some of the news this year, not in the U.S., but in Japan and in Korea, you know, they're hacking and hundreds of millions of dollars were lost. What should new crypto investors be looking at as a place where they want to trade? What are the sort of variables out there, Jeffrey?
Well, you know, you really want to go to reputable exchanges, and I know that's an easy thing to say, but you need to check it out first. And there's plenty of information online. People who are new to this market, quite frankly, they have a little bit of a difficult time because crypto is actually sort of strangely difficult to get. Part of the reason for that is precisely the past regulations on exchanges. There should be 100,000 exchanges, you know, not 1,000 exchanges. So this is part of the problem. But yeah, it's difficult for noobs. I totally understand that.
I mean, it seems to me, Jeffrey, like you'd want to know about, just like you would with any exchange, you know, what are the transaction fees there? How long does it take to get your money out? Sort of basic things.
Yeah, what are the limits on pulling out? You know, whether there's any kind of record of shenanigans of some sort, which, I mean, most of the exchanges out there, they have a strong incentive to avoid any kind of malfeasance at all because it is a rather competitive market. I mean, ideally, you wouldn't be using an exchange at all. Ideally, you keep possession of your private keys. You own your own tokens. You know, in the best possible case, you keep them in hard storage. You know, in cold storage. But yeah, that is technically difficult. There's a reason why these exchanges are so popular.
Yeah, Jeffrey, let me ask you. We only got about 30 seconds left. You may not want to do this, but if you were a betting guy among, you know, Bitcoin, Litecoin, Ether, where do you think would be a good place to put some dough now?
Well, from everything I can tell from the markets, Bitcoin Core seems to be, you know, the market leader. It's the most highly capitalized coin. And truly, if you are risk averse, that's where you go. If you plan to use crypto in your daily spending, I think things like Bitcoin Cash and Litecoin and Dash and Monero, they work for you. But if you're just a person who's risk averse, you want to put money in and just not to touch it, you're just not going to do better than the gold standard of Bitcoin.
Jeffrey, you're always full of information. We sure appreciate you here. Jeffrey Tucker, the editorial director at the American Institute for Economic Research. Thank you for being with us, Jeffrey.
It's my pleasure. My pleasure.
And time now for a quick pause, but stick here because when we return, Danielle DiMartino Booth talks with us about a new report from the International Monetary Fund, along with some recent news regarding sanctions and trade tariffs. Stick around. We'll be right back after the break.
The feeling of freedom. Everyone in the world should experience freedom, and you get it on the open road. The world according to Jesse. Welcome to my world. Come along for the ride.
Do you know what you've got in your hand? You might think it's a phone, but in the news, we see it as TV. With Pluto TV, the free and unlimited TV app, you can get TV everywhere for free. And since TV is everywhere, so is RT. Streaming on all your favorite devices, outdoors or inside, any time of day or night. Catch all of our award-winning shows, news, and cutting-edge analysis everywhere you look and wherever you go. Question more. Hey guys, I made a professional-ish PowerPoint to show you how RT America fits into the greater media landscape. RT is not alt-left or alt-right, but we are a solid alternative to the bullshit. We don't skew liberal or conservative, and as you can see from this bar graph, we don't skew the facts either. Talking head lefties, talking head righties. Oh, there you go, above it all. So look out, world. RT America is in the spotlight now. And frankly, I have no idea how to classify us. It actually took me way more time than I care to admit.
Welcome back. We didn't have our numbers today, but the Dow was down and both S&P and NASDAQ were up. On Tuesday, the British pound set a new post-Brexit high, trading at roughly $1.43. In euro trading, it was pushing 1.16, the highest conversion rate since May of last year. The pound previously set a record for a one-day drop in currency value immediately after the vote to leave the European Union. The pound sterling's value has increased by 6% already this year. It's been assisted by factors including increasing optimism about a Brexit deal and weakness in the dollar. And last Friday, a currency strategist at ING of the Netherlands called the pound the darling of the currency world. Earlier today, the pound fell back a bit on news of higher than expected inflation. The European Commission is seeking to improve bank regulation and ensuring quicker access to electronic communications of alleged terrorists. On Tuesday, the Commission proposed giving judges across the Eurozone the power to demand evidence held in servers in other countries in terrorism cases. Companies would have to produce the requested materials within 10 days or even 6 hours in designated emergencies. The Commission also responded to the recent money laundering scandal at ABLV, Latvia's third largest bank, by proposing to ease sharing of banking information between national financial intelligence units. The bill would set a 3-day deadline for units to respond to information requests from their colleagues. And a cash shortage in India has left automated teller machines, the ATMs, in parts of the country empty and is forcing India to print more money. The finance minister of India sought to reassure the public that the country has enough bills in circulation for all its economic needs, while also admitting that there were some, quote, temporary shortages in certain areas. The sight of cashless empty ATMs across the country has renewed debate over Prime Minister Modi's decision in 2016 to discontinue use of high-value banknotes, which accounted for 88% of the cash in circulation at the time. The latest U.S. housing numbers for March are in and paint a mixed picture of the market. Construction of multifamily units was up and housing starts exceeded expectations, while there was a fall in the key single-family sector. The Commerce Department says that single-family home starts were down 3.7% to 867,000 units. Single-family is the largest category within the housing market. And overall new construction starts were at a seasonally adjusted annual rate of 1.3 million units, an increase of 1.9%. Multifamily units, meanwhile, made a big gain of 14.4%, setting an annual rate of 452,000 units. The International Monetary Fund, which is holding a meeting here in Washington at the end of this week, has released a troublesome report which highlights the dramatic debt load of the world of $164 trillion and continuing trend that might make it more cumbersome for countries to react to the next recession and pay off debts if financing conditions tighten. And here to discuss the IMF report and other economic news is our friend Danielle DiMartino Booth, CEO of Money Strong and the author of Fed Up, and a former advisor to the U.S. Federal Reserve System. Danielle, the world's nations have made some great economic progress in the last couple of years, yet as the IMF points out, there may be potential trouble on the not-too-distant horizon, especially with regard to this global debt. What do you make of the report?
Bear in mind, Bart, that the report actually only refers to developed nations' debt. If you tack on emerging markets' debt on top of that, you get to something that's closer to $240 trillion. So big numbers we're talking here, Bart. And it is troublesome. The IMF report really put things into perspective. And what they had to say was that within 5 years' time, that Italy would be in a better position in terms of its debt to GDP, debt as a percentage of its economic output, compared to the United States if our debt continues to grow along at its current trajectory. Now, to think that we'd look across the pond and say, you know, you Italians, you profligate Italians, you don't know how to stop spending money, and Italy's going to be in better fiscal shape than we are in the space of 5 years, the IMF report was very eye-opening.
That's very interesting, actually. I'm curious in general, Danielle, about this debt to GDP ratio. I mean, if you don't have growth in your country and you have a big debt and you've got interest on that debt, I mean, there's no way out, right? I mean, it's you know, like I was in college with a student loan and a salary that didn't pay enough, government salary. How are nations actually going to deal with that? Just hope for economic positive news?
Well, I suppose so, Bart, but if there's positive economic news, there should also be, along with that, rising interest rates. If you look at the situation here in 2018, in our fiscal year, the United States is expected to pay $600 billion on its interest. Look out 5 years, and this is what the IMF is looking at, and it's over $1 trillion just to service the debt. And remember that the United States is leading the world's central banks in terms of tightening monetary policy, so there will be other countries that follow along the same path, meaning their debt interest expenses will continue to rise as a factor of time as well.
Which are the worst or the most troublesome GDP to debt ratio nations out there, Danielle?
Well, I mean, Japan has been the fiscal basket case for as long as we can remember. But the fact that the structure of their treasury, their sovereign market, is such that the majority of the ownership is within the country. So that's one of the reasons that's been bandied about that Japan has avoided any kind of calamity in the past few years. In my opinion, the situation really has yet to be truly tested because so many other central banks came riding to the rescue during the crisis with quantitative easing and money printing. But after Japan, you get to countries like the United States and Italy very quickly, Bart, unless you're talking about Mozambique and Barramundi and other types of emerging market nations that you would expect to have higher debt to GDP ratios. But again, the IMF report today pointed out that we will be at 116% of GDP within 5 years, again, on par with where Italy is today and approaching, by the way, what we consider to be DEFCON 1 levels in Japan.
It's really scary, but thank you for helping us understand it, I guess. No, we thank you. Now, let me ask you, let's turn to Germany, which I know you actually highlighted for us, and we appreciate that. There's a new study by the German Macroeconomic Policy Institute that warns that there's actually a possibility of a recession in Germany, and there's even another researcher there who noted who says that there is a big chance that Germany in the next several months may move into recession, and Germany's been the stalwart in the Eurozone. What do we make of that, Danielle?
You know, what was most telling about this particular report was the rapidity with which the tables seem to have turned for Germany. It was just in the single-digit percentage probability in June, and now it's up to a third of a 33% chance of a probability of recession setting in. Now, if you look at the IMF, for example, they would say that there's not a chance in the world that Germany is going to be going into recession anytime soon. On the other hand, going into 2008, before Lehman Brothers blew up, they also saw no chance of Germany and of Italy going into recession, and that took place just several months later. So it may be an alarmist view, Bart, but I certainly think it's something that we have to pay attention to. Germany is not just the stalwart of the European Union. It is not just the strongest economy in Europe. It is one of the strongest economies in the world and a huge exporting nation. The fact that it has slowed down as quickly as it has should really be raising red flags for policymakers worldwide.
Yeah, it is spooky. More spooky news. Let's shift to two last areas. We only got a couple of minutes, Danielle.
I feel like this is Halloween, Bart. It's not Halloween, is it? Help me out here.
It's not. So one area is these sanctions, Danielle. But let me ask the question. They're both sort of the same question, so I apologize for a little bit long question. One is the sanctions that were going to be put on Russia. Nikki Haley, the U.S. ambassador to the United Nations, said on the Sunday shows, you're going to get more economic sanctions. Then it was determined on Monday, no, we're not putting them on. Larry Kudlow said she was confused. Ambassador Haley says, I don't get confused. In the meantime, we've got the back and forth on the TPP. We're going to be in, maybe. We're going to be out. I don't know how to follow this administration. I want to be supportive of some of these policy positions, but I don't know where they stand. Wait 5 minutes and it changes. How the heck are markets going to react to this sort of stuff, Danielle?
Well, I think that what you should really look at, Bart, is the fact that the markets are paying very close attention to the worst-case scenario contingency. We saw nickel prices up 10% today based purely on the threat that the Russian sanctions could come to pass. I think that right now Nikki Haley has been articulate and poised, and I actually take my hat off to her for saying, no, thank you, I don't get confused. So there are very real reasons to be imposing sanctions at these junctures, and I think that the lack of continuity in communicating out of the White House right now is just very disturbing and creates a layer of uncertainty for the markets.
Always informative, Danielle DeMartino Booth. Thanks for joining us. And that's all for now. Thanks for watching. Be sure to catch Boom Bust on YouTube, youtube.com/BoomBustRT. We'll see you again.